I'm Ashton Addison from EventChain for Investment Pitch Media and FinTech News Network. And today on Blockchain Interviews, we have Harry Dent, economist, investor, and market analyst. Harry, welcome to the show, and thanks so much for taking the time to be here today.
Nice to be here, Ashton.
You're very welcome. I'd love to start off our interview with just a little bit of background on yourself and your recent focuses and a little bit on your philosophy of investing right now.
Yeah, it's funny. Like I took economics in college because I was into forecasting. I figured out they couldn't forecast anything, so I quit that major and took accounting and finance by my father's friend's advice. He was a big political guy, so he knew all these donors. And then I went to Harvard Business School, strategic planning, Bain and Company, Fortune 100 company, strategic planning, and I hated large companies, so I ended up focusing on new ventures in California. I turned around and consulted to, and then eventually started my own business. And so that's where I learned everything. I saw the baby boom coming back then in the early 80s because they were emerging just into the workforce then, new innovative generation, young, the opposite of what I was dealing with Bain and Company and Fortune 100 companies, dealing with old people and old products, So I really tripped on demographics just as they were creating more information than ever starting in 1981 at the U.S. Bureau of Labor. I mean, 600 categories. I know everything about people just from that. So new theories about how generations drive booms and busts, how every phase of it will be driven by different consumer sectors, how they adopt new technology, on and on. I mean, I just ended up tripping onto all the secrets of economics without being an economist. And if I had been an economist, I'd never see them because they're taught to think differently. I thought as a business person, as a consumer, and that consumers drive the economy, not governments, and that ended up being a huge advantage. So I came up with an entirely different way of projecting economic trends. Real quickly, I'm known for predicting the 90s boom before it happened. That was nothing. I predicted the collapse of Japan in 1989 when people thought it was going to take over the world, and the greatest boom in history in the 1990s into 2007 and that sort of thing. So very simple indicators though, like move forward the birth index for a generation, which I adjust for immigrants, and which I can do very accurately, by the way, including illegal estimated, for the peak in spending for the average person age 46. And I can tell you when the economy is going to boom and bust in any country around the world, decades, not years, not months, decades in advance. That was one of my breakthrough indicators of many. So again, whole new way of looking at things. And I also now, particularly in this time, with blockchain emerging and the internet maturing, that's when you get bubbles at the peak of an old cycle. So I've really studied bubbles, and I've gotten my newest cycle in the last 10 years is a 45-year technology cycle with two S-curves accelerations within. And that really, when you take demographics and technology, those are the two things that really drive the economy. Governments are just laggards. I don't look at governments unless we're in a dictatorship. And actually, we're getting pretty close to that here. So I might have to do that.
Yeah, well, that's a great intro, Harry. And yeah, you're right, down in the trenches, working in the tech startups, so much innovation going on right now. And it's moving really quickly.
Those are the people creating the future. Do you want to hang out with laggards or the innovators? If you want to see the future, exactly. Look at demographics, but also look at the people creating it. That's why working with entrepreneurs was the most important thing I ever did.
And you've been through a lot of market cycles now, and it seems that we're approaching a pinnacle point in 2020 with the market. Look, I'm sure you've been following the stock market right now. COVID hits, there's a crash, V-shaped recovery on the way to the presidential election. Surprise, surprise. I'm curious, how are you approaching the market post-election? How cautious are you being with this market?
Well, I think we've either seen a peak on September 2nd or we're about to see a peak just before or after the election with possibly one more slight new high. Originally, way back in the 80s, I predicted that the economy would have the greatest boom ever, peak in 2007 and slow down because the baby boomers would have peaked in spending. And it's a huge generation and the millennials would not be enough to replace it for a long time. But what I found out when I got into these technology cycles about a decade ago, every other 45-year technology cycle, you get a convergence that causes the bubbles of bubbles, a 90-year bubble cycle. I was saying originally that 2008 to 2023 would look like 1930 to 1942, the Great Depression, a winter season, a shakeout, debt deleveraging. And we got that. And that's why we lived on quantitative easing ever since. 2008 did look like 1930, and the banks just went bazookas and said, well, we can't have a depression, so we'll just print all the money in the world to prevent it, which is bad policy, by the way. It doesn't allow the economy to rebalance and get more efficient again. So we have zombie companies everywhere. Mm-hmm. But the difference is, in the early 30s, the worst of the crash happened when the bubbles first burst. Since government shut that off, we're going to get the worst at the end, which I've always said would be by late 2022 for stocks and 23 for the economy, by my demographic and other cycles. So I think we're getting ready. We started with the first hit because of COVID, but that was just the trigger. Mm-hmm. That's not what's wrong with our economy. And when this COVID crisis disappears incredibly rapidly over the coming months, which it will, and past viruses have, we're still going to go down because we got so many zombie companies, and baby boomer spending is going to be even worse, and we got more debt than ever. So I've been looking for a major crash around late 2019. In late last year, I said, hey, it looks like the peak's going to be early to mid 2020. And then, of course, COVID came. And I said the first crash is going to be 40% in a short period of time. That's when you know the bubble is peaking finally, after up and up and up and stimulus. And now they had massive stimulus. And now we may go back and make a new high. We've only made new highs in the tech stocks in the U.S. Mm-hmm. No other major countries made new highs. The small caps, the Russell hasn't. So I think we've peaked. We're going to see the final peak in the tech stocks, I think, right around here. And I'm telling you, next 2 years is going to be the biggest stock crash of our life. All of this mm-hmm. money printing has just made this bubble bigger and longer. And stocks in the winter season type of crash and major bubbles don't correct 50% like in the 70s or past, long-term decline. It is 80% plus. It was 89% in 29 to 32. So this is going to be a shocker. People think I'm crazy. I'm like, I'm sorry, I studied history and you didn't. This 90-year cycle is the single clearest trend since the stock market. Stocks were created in the late 1700s in the Industrial Revolution, leveraged technologies and made this 45-year technology cycle I talk about more important than ever, even more important than the demographic cycles I first discovered. So I see the crash of a lifetime, which turns into, if you're smart and get conservative here, the sale of a lifetime on financial assets. Mm-hmm. Right now, let me quote you an important number that nobody talks about. $500 trillion in financial assets globally, and 255 to 60 trillion in debt. Normally, debt is the biggest factor after a bubble. This financial asset bubble has been so blown up by quantitative easing, which injects money into financial assets. It doesn't create the inflation the gold bug said, because it's not going into consumers and banks and stuff like that to multiply consumer spending and prices. It's going into financial assets. This bubble burst, you're going to see $200 to $250 trillion disappear forever, like in the early 30s. Stocks didn't come back to those 1929 levels till 1953, 24 years later. So that's going to cause deflation, not inflation, major crisis. If you just get safe and turn your financial assets, stocks and real estate and bonds into safe investments in cash, you're going to be able to buy. The world's going to be on sale like it was for Joseph Kennedy in 1932-33 between 2022 and 23. This will be the greatest opportunity. And the blockchain early stage companies, which are still very early stage, are going to see one shakeout, and then they'll be the next internet. They will lead us out of this next thing, along with millennial spending by that generation. So this is going to be very hard down, and then we're going to see another global boom, and people aren't going to see either coming.
Yeah, super interesting point in time right now, especially with these FANG stocks growing in such value, and of course a lot of it is in part from the debt.
Well, it was just like the Nifty 50 in '72, and of course the General Motors, Ford, RCA, and AT&T. Those were the high tech companies. They don't seem high tech. Those are the high tech companies back then. TV waves and radio. Are you kidding me? That was as high tech as it got. They crashed the hardest. They bubbled the most into 29. They were the bluest chip. They are like the FANGs today, and the FANGs will go down the hardest. I am predicting that the NASDAQ will go down to of 87%. Okay, so it's going to go back to where the bubble started. You know, so back to around 1,000 or something like that on the Nasdaq. I mean, people don't think that's possible. That's exactly what happens at this phase and after a bubble of this magnitude. And I'm telling you, Ashton, there is not a bubble I can compare to this bubble in history. This is the largest, most global, and most pervasive. It's real estate. It's even gold has bubbled. It's bonds. Bonds have had a 40-year bubble in falling rates. And after this, it's going to go 20 years plus rising rates. So a lot of things are going to change. And I hate to say it, most people aren't going to see it. And economists never have the out-of-the-box scenario. It's always like, well, it'll be a little, and then da-da-da-da-da. So, I mean, everybody knows stocks are overvalued. Everybody knows we got way more debt than any time. But the Fed will do the da-da-da-da-da-da, and we'll come out kind of a soft landing. There is no soft landing in all of history to any bubble anywhere near this magnitude. Zero, ever, in any asset class.
Yeah, well, a lot of people right now, you know, Robinhood is blown up. People that don't normally invest in the stock market are putting their money there because they hear that the dollar's going down and the stock market's going up, so I might as well jump in. And there's other people as well that are going for a diversified approach and getting gold and silver and Bitcoin as well.
There's people hoarding gold and silver, and guess what? Those are going to go down too.
So
guess what happened in 2008? Stocks went down first, but gold followed them when things got nasty. Gold sees at first a crisis and says, oh, good, you know, they're going to print money and we're the safe haven. No, when it gets nasty and they see deflation. See, the last crisis in the 70s was an inflation crisis. Gold loves inflation. Gold is the inflation hedge, and so is real estate, by the way. Real estate does not like deflation, and gold and silver do not like deflation, nor do stocks or bonds, anything but the highest quality bonds. So this is going to be a shocker for everybody. I mean, and you know what they call the people buying call options at Robinhood, don't you? The dumb money. Jumping in at the end, full feet, like there's no way this bubble can ever stop because the Fed won't let it. The Fed has blown it up so much, it is inevitable it will burst. I was talking in Dubai, I think it was late 2007, right before their big real estate bubble burst. And I told them that, and they said, Harry, it can't happen because the government won't let it. And I said, well, that's exactly why it's going to happen. Government pumps it up artificially. Eventually, it blows of its own extremes, even though the government tries to support. There's a point. We just printed as much money in 8 months, the Fed, with this into this COVID crisis and repo crisis, as we did in the entire QE cycle before it over several years. In 1/10 the time, we printed as much money. And guess how much inflation we got? None. And guess how much? A little slight new highs in the stock market. This thing is not going to last much longer.
Yeah, crazy times right now. And there is a prediction that the dollar can't sustain in the way that it is built, and the next version of the dollar may be gold backed, it may be central bank digital currency or blockchain backed. Do you have any thoughts on what is the next version of the dollar?
Yeah, absolutely. In the near term, and I damn near guarantee you this, the dollar is going to go up. It did. Gold went down and the dollar went up in the worst of the crisis, 2008. So, because the dollar is a safe haven, we printed way less compared to our economy than Japan and a good bit less than Europe. We're the best house. Currencies don't trade in absolute values like stocks and bonds and real estate. They trade relative to each other. Dollar will be the safe haven. Look what happened in the recent crash. Stocks down the most, Bitcoin down more, stocks down 35, Bitcoin down 46. Treasury bonds, the safest U.S. dollar-backed bonds, up 24%. That's the safe haven. U.S. dollar, high-quality bond. Now, after this crash, people are going to realize central banks are nuts. They should never be able to control the economy like this. I am so into blockchain and cryptocurrencies because it's going to take a digital, broad-based, bottoms-up system of creating money out of natural transactions, not governments trying to push their economy, trying to push down their currency so their exports do it. All governments do is manipulate and overstimulate. They're pushers. They're always giving us pills. We got a market and economies on crack. When this bubble bursts, people are going to say, we need a new system. So I do not see blockchain or Bitcoin and cryptos being the safe haven in the crash, I see them emerging out of it, just like the internet emerged out of the last bubble. Internet stocks came in the late stage, in 98, 99, only in the last stages of that first tech bubble. It crashed. They had a big shakeout. The Amazons and stronger survived. And then the greatest driver of the boom was internet stock. It's going to be, blockchain is going to be one of the first arenas. I'm starting a fund in Australia. First thing I'm going to look to invest in on the technology side, along with a lot of other areas. But there's going to be a shakeout first. It's going to take a while to replace the US dollar. Nobody's going to want to replace the US dollar when it holds up better than all the other currencies at first. But people are going to realize central banks blew up this bubble way beyond natural means, and they should never be allowed to manipulate economies from the top down again. And the only answer, it's not going to be gold. There's not enough gold to fill a damn swimming pool, for crying out loud, in the world. Gold worked in the past. The economy was a commodity economy up until the early 1900s. It is no longer. It is going to take a digital solution like blockchain and cryptos to form a new way of creating money that is transparent and cannot be manipulated by central banks. That's the whole point. I think the central banks are going to get fired after this downturn, and I can't wait.
Yeah, it's an exciting time ahead, Harry, and we're running out of time, but do you have any last advice for whoever is left in the middle class as they face a tough road ahead, especially in the coming months?
Well, the middle class, the biggest fear is losing your job. You know who's going to get hit by this bubble crash? The people who own it. The top 20% own 88% of financial assets outside of your own home. And the top 1% own 45%, and the top 0.1% own 22%. These people going to get crucified. Do you remember Ted Turner crying on TV? He owned AOL when he sold out to them. AOL was at 400 times earning. He lost $9 billion out of his $10 billion in that crash. So rich get hit the worst. Everyday people have to worry more about losing their job and doing something on the side or getting creative or having a number of jobs. But everybody, if you just sell unnecessary real estate, get out of stocks and anything but the highest quality bonds, just be safe and make minor return. This crash will just make your money worth more in buying real estate or stocks or something else to grow your wealth in the next boom. But the middle, I'm telling you, it is going to be the rich people. This economists don't know how to solve income inequality. Let this stupid bubble burst. It'll solve it faster than the speed of light. You can have a lot of rich people crying. And you know who I can't talk out of this? Rich people. I can talk an Ohio housewife into what I'm saying. I cannot talk a rich person living in Manhattan, San Francisco, or London, where they think real estate could never go down because they're the richest people and that's what they buy. And I'm like, you're not going to have any money. You're going to be like Ted Turner crying 2 or 3 years from now.
Yeah, well, it's an interesting road ahead, and there's lots of things that are going to happen. So, I'm excited, and it's a big shift of wealth. And if you're in the right positions, then you will come out on top.
And it's a big shift. It's going to force, just like this COVID crisis, it's forced us into new technologies and doing more online and working. I haven't gone to an office since 1989 when I started my newsletter, ever. I don't dress up. I live in my bathrobe half the time. I save a lot of time. And it's a lot more convenient. So all of this shock, yes, it's going to hurt, but it's going to force us into new industries. It's what's going to elevate new technologies like blockchain into the mainstream. People are going to see why it's necessary instead of just the people, the small group that's behind it now. Everybody's going to start seeing we need a new way to deal with. Basically, blockchain is the digitization of all money and financial assets. That's the simplest definition. How could that not be more important than the internet? Because the internet's about information. This is about things that are value. Incredibly important for the future. And the internet can't handle this stuff. It doesn't have the security capacity to handle this stuff.
Yeah, well, that's a great way to end it, Harry. We're out of time. Is there any other way for the viewers to follow along with your work and connect with you?
Yeah, harrydent.com. We have a free weekly news to get to know us. We have paid newsletters. I frankly advise getting on those sooner than later because I see the, what hitting the fan probably just after the election. So harrydent.com, you can get on a free newsletter and learn more about us. That's something.
Thank you so much for your time, Harry.
Thank you.